70% of adults over age 65 will need some form of long-term care. Is your retirement plan prepared for this expense? Hi, my name is Michelle, and I'm a financial advisor here at Financial Design Studio. We help business leaders retire in a tax-efficient way. A huge piece of retirement planning is planning for your long-term care, which as you get older, you will start to need in some form. Now, maybe you're watching this video because you're starting to look forward to retirement, or maybe you're presently helping someone else, an aging parent or a loved one, plan for their long-term care. We'll walk through the different options you have, the costs that you can expect, and ways to fund them. So let's get started. We get the question a lot, do I need long-term care insurance? And what I want to start to talk through first are the options that you have for long-term care and what they cost. So let's look at this because then you'll start to see that why people are asking this question. So first, if we talk about long-term care, let's talk through the first few options that people typically have when they think about what's the care that I want as I age. So for example, a very easy one or a natural one could just be in-home care. So maybe you just want to stay in your home where you live already, and you just want someone to come in and care for you. Then another kind of step up in care could be assisted living. This is where you could go somewhere to a facility or maybe to a home like a townhome or a single family home on the campus of that medical facility, but you're just kind of moving up a little bit in care. And then finally is more of like a nursing home or continuing care where you have care around the clock. You know that as you age, you're going to stay there. You're not going to be moving again, and you're going to get, the additional care that you need as you do need it. What's interesting about these three levels of care is that, even as you hear them, you might be telling yourself, oh, I do not want to live in a nursing home. I do not want to live in my home and then have someone come care for me. We've either seen loved ones who have had different levels of care, or we've had experiences, or we just have thoughts in our own mind that we say, I want this or I don't want this. What's really important as you start planning for retirement is that you start to build in or think or tell someone and start to say, here's what I would really like to happen if it was ideal and if I had a choice. And so these are the types of things that will impact your plan. Now, when we start thinking about just long-term care coverage or just long-term care expenses in our retirement plan, generally what we see, it could be anywhere from $5,000 a month, maybe all the way up to even $15,000 per month. These are monthly costs that you could see. So you can see that these could easily get up to $180,000 per year for one person for the care that you need. So for full-time care, maybe someone who needs to be in a memory care unit, things like that, that's when you would start to see kind of these higher expenses. Again, $5,000 a month could actually be high if you're someone who says, I want to live in home and I only want someone to come, once a week, whatever that looks like. So again, this is just a range to give you kind of an idea or something to help you plan in your retirement plan. So that's kind of that average cost that we see. Now, again, when you're thinking about what you want to happen, there's different ways to pay for this. So in these different communities, for example, you just might have a one-time cost where you're just going to purchase the unit. Let's say you're going to purchase a townhome or an apartment in this building that has the medical care. They come to you or you go to them as you need it. But there's kind of this one-time cost, much like you're buying a house, like you're buying your home that you're going to live in. And then you might also see some where you have that one-time cost plus, so this one-time cost plus that monthly. So again, that one-time cost is kind of buying your living unit, but then that plus is more of this monthly fee to cover those health insurance needs that you have, or the care that's really beyond just living there. And so this is where you can see there could be any form of this. So it's very important that you're asking questions like, what are my costs and when do I pay them? Sometimes at some facilities, it could be depending on your level of assets that, you need to pay for something and maybe, you don't get that money back, or maybe you do get that money back. Maybe that's a unit that you actually purchase and you can sell. These are really important questions in your plan to be asking. Now, when we're building a retirement plan, we can build in costs. So let's say that you want to assume the highest cost it could be. So we're going to assume 15,000 per month for, you and your spouse, and we're building that into your plan. But let's say, that's what we build in. But when the time comes to actually choose between these, now we start to ask these questions. Okay, this is the one I want to live at, or it's between these three. How do I have to pay for these? This is when we start to kind of look through our options to see what works for your plan. So much like any retirement plan, it's not just a one-time plan. It's something we're always working on as you start to change your needs or things like that, so that now we can say, yeah, your plan still works doing it this way or choosing this option. Now, as we're talking about long-term care expenses or insurance, and sometimes it can get a little fuzzy in between long-term care and then talking about Medicare or health insurance. So I do just want to spend a minute here where I'm going to explain the difference and to help you understand maybe what type of coverage would cover what expense. So for example, long-term care, we've just talked about, you're going to move into a community that's going to give you more care. And so you're moving into that community, you're purchasing maybe a unit where you're going to live, but now we also need to consider the health insurance, because now the health insurance, just like today, when you're healthy and you get sick and you need to go to the doctor, you need to pay for that doctor's care or that prescription coverage if you need a prescription, those types of things. So health insurance covers those pieces when you need care, versus long-term care covering more of the facility or the care that you're going to get from someone there just in the course of your daily life. Now, it can be that long-term care coverage, your health insurance, this is where it can be tricky, and those can kind of sometimes overlap. So that's why I just want to help you think through what covers what. But again, it's good to ask these questions to make sure you know and you're asking as you plan. So for example, just health insurance, this really covers more of those doctor's visits, things like prescriptions. That's what's being covered by that specifically. Then as you're working today, your employer's covering your health insurance. And so you might have an HSA that you're also saving into. Again, for tax purposes, this saves you money. And so an HSA, you're putting money into that you're going to use in the future. Now, an HSA in retirement can be used to cover these health expenses too. Now, when we think about health insurance, this is typically where we think about Medicare is your primary health insurance. So that's covering once you're age 65, Medicare is covering as your primary health insurance. And then you get a secondary. So this could be another policy, Blue Cross Blue Shield, any company that's basically going to cover most of what Medicare does not. What we see with people who live in communities like that is that now they're actually able to deduct a good portion of these medical costs. So for example, on your tax return, you have to have higher than 7%, 10% of your income before you can even deduct any health insurance costs. Now, because so much of that care that you're paying for is considered medical, a large amount of that is able to be deducted. So while it can seem expensive, and it is expensive, it's a lot of money to get this level of care, you can also typically deduct a portion of that. So what happens at the end of each year is that facility will give you a letter saying, here's how much you've paid, here's how much is deductible as medical expenses. Now that I've explained these differences between long-term care and health insurance, I want to help you understand where to go from here or what you can do now. So these are some things, because as you're looking at your retirement plan and you're saying, I want to plan ahead for this, it's really important first that is what you're doing. You need a retirement plan, and these things need to be included in it. But also, you need to make sure that your estate planning documents are in order. So when we talk about estate planning documents, what that includes are things like a will, a trust, powers of attorney for healthcare, powers of attorney for property. At a minimum, you need to have those documents in order. Depending on your situation and your level of assets, you might need more documents, different types of trust, different amounts of trust, things like that. So it's very important you have those documents, because you're then saying, this is who I want to provide or take care of me when something happens. So it's very important to have those documents in place. And then as part of your retirement plan, or the things that you're doing now, is saving for these expenses. So remember when I said a lot of people will ask us, should I have a long-term care policy? Really, the answer to this question lies in your retirement plan. How much are you saving? What are you expecting these expenses to be? What level of care do you want? That's where we really start to build that plan, and we look at what are the tax opportunities, the tax savings opportunities, what are the things that we can do, financial planning strategies to help your money last as long as possible. Those are the pieces. Now in this retirement plan, we'll see what can work. So, long term care usually ends up being one of the largest expenses in retirement, which is why planning ahead is really important. So, if you're someone who's starting to think about retirement and you want to do so in a tax efficient way, we'd love to help you. Click Get Started on our website to schedule a free consultation with our team to discuss your retirement needs. Thanks for watching.